You don't have to put your money in a prison for decades and rely on someone else to achieve the financial abundance that you deserve today. You don't have to be rich to become your own banker, okay? It's not about getting started with a lot. It's about just getting started. Everything that we do financially today, whether you're paying off debt or you're making an investment or you're paying your light bill, everything that you do financially today starts with the foundation of banking. Nothing happens without banking. You're doing all the work and someone else is getting all of your money. Think about it for a second. How does that make you feel?
Couldn't be any more excited to welcome everybody here. You made the right decision. You're in for a real treat this evening. We have a couple of amazing speakers who are going to contribute to tonight's session. Case studies, the examples that we're going to reference are going to get your imagination working on what I believe is more important now, probably more than ever, in taking control of the banking function as it relates to your needs. And my name is Jason Lowe. I'm the current CEO of Ascendant Financial and chairman of the Lowe family group of companies. And I've been practicing this process personally, going into my 14th year. And we have 62 policies in our family banking system. And we recapture all of our personal overhead, all of our corporate overhead. All of that money is flowing back to our family, back to our businesses versus flowing away. And you're going to learn how you can do that as well. And so without further ado, I want to bring on one of my dear teammates, the amazing Vern McCarty.
Who was our Nelson Nash? Let's just do a little bit of a thinking exercise, prime our brains. Let's start by figuring out who revolutionized the automobile industry with the Model T.
Just overwhelmingly Henry Ford.
Of course, absolutely, a smart group. Well, what about who created amusement parks and pioneered the cartoon and film industry, including Mickey Mouse? Walt Disney and Goofy and Donald Duck are actually my favorite characters. So who revolutionized a process to enable you to become your own banker?
Georgina says, Jason Lowe.
That's awesome.
No. All the credit to, again, overwhelmingly, R. Nelson Nash.
Yeah, the great and powerful R. Nelson Nash. We're all just so grateful for this gentleman. What a peaceful, stress-free way of life it is when you get the banks out of your life. This is a term that Nelson coined back in 1994 when he had finally achieved the milestone of firing what he referred to fondly as the snakes and dragons, i.e. the commercial bank. At this point, he had completely recaptured all the debt in his personal life. And ever since that point, he and his family had never stepped foot into a commercial bank for the need for financing ever since. All that money's flowing back to the family, just like what Jason had shared earlier. By the end of this webinar, you'll know that you are capable of becoming your own banker. We have some specific objectives tonight. Ultimately, it's clarity. You'll be clear on the problem. And once you're clear on the problem, the solution will become clear. And you'll know what you can do. It's all about what we can do. It's all about putting control back in your hands. You'll feel like you found a new belief in a way that I can create my own peaceful, stress-free financial life. What's the opposite of feeling stress-free? I'm already laughing because I know this is showing up. Everybody we know has felt this way. And I always get a kick out of this slide. You know, when things aren't going right, it's like, I want to shake my hairbrush as well. You know, you've been taught to put your money in places like mutual funds, commodities, stocks, bonds, and hope that that money will grow. It's really like putting your money in a financial prison. You cannot access that money without some kind of a penalty or some kind of a fee or interrupting the growth, if there's any growth at all on that money. You put your money in a prison, and then you need to go to someone else's bank. I say that again, you need to go to someone else's bank. That's the key part, to access money when you need more money to create, you know, to finance vehicles or do whatever it is that you need to do, or take advantage of an opportunity. We got to jump through their hoops. You're doing all the work and someone else has got all the control. It's absolutely absurd. Okay. I'm telling you that if you've been handing your control over your money to someone else, you might not be in the best situation right now. Everything, you know, there's turmoil in the world. We're going through a pandemic. There's a lot of uncertainty out there. But guess what? It's not your fault. Now, my question is, are you committed to discovering the process of becoming your own banker? I started out by saying you're going to find out exactly what you can do. And that's what it comes down to, is looking yourself in the mirror and asking, are you willing to commit to improve anything that you're now doing financially that is preventing you from becoming your own banker? You know, it's like math. If I change my actions, it's an equation. I'm going to ultimately change the result. So are you committed? Welcome to commitment. Enjoy your stay. I discovered the path to a peaceful, stress-free financial life the hard way as well, much like many of my colleagues. You know, I'll share a quick story. When I first got into the working world, I was in the construction industry. Nothing wrong with that. If you chose construction, I think it's great for you. I really didn't choose construction. It was kind of a default thing for me. I remember when I was 18 years old, I was playing football and all these kinds of things in high school, and things were going pretty good. I didn't realize that my life was going to dramatically change. You know, obviously when you graduate, all that kind of goes away. But I remember sitting down in the office of my guidance counselor when I was 18 or 19, maybe years old. And he was actually my rugby coach as well. And he said to me, Vern, you're going to go play football at university. He said, what do you want to do down there? What are you going to take in school? And I said, oh, well, I was thinking I would get into business, because I didn't know anything about business or money at that time. We didn't grow up with a lot of financial well-being in my life, right? And I just thought, you know, guys with ties have money. That's what I thought. Okay, I got to get into business. Maybe I can help some people, do something with my life that way. So I said, I want to get into business. And he leaned in and he said, Vern, have you ever heard of trade school? And, you know, I didn't know what he was saying at the time, but the meaning I added to that was like, Vern, you're not getting into business. You know, it's not for you, type of thing, right? So later on in life, I discovered that, and I didn't feel very good about it. But then I did actually get into construction. I went to university. Things didn't go very well for me. I ended up leaving quite early, and I came out to Alberta because my uncle was out here, and it was the busiest place on the planet at the time. In 2004, it was just blowing up out here. And I actually was applying for jobs the old-fashioned way. I was sending out resumes and stuff, and everyone was so busy that they didn't even get back to me, right? So I literally had to do all these odd jobs, and I ended up eventually landing some good positions and working and then getting into trades and all that sort of stuff. So I went that route, and it was very hard work, and it was not fulfilling. And so I started doing this crazy thing called, you know, reading books, educating myself. I discovered personal development and things like that. I didn't realize that I could actually change who I am. I could transform my way of being. I can grow, I can acquire, I can become a different person. And so I got into becoming a contractor, and I did all these things, but I did that all by myself. I actually thought that I had to figure everything out on my own, and I had to be Mr. Everything. So you can imagine that I ran into a lot of problems. And luckily for me, and luckily for you, I made a lot of mistakes. And a lot of mistakes financially, but we either win or we learn, right? And that's exactly how it went for me. I acquired a lot of debt. I made a lot of mistakes. I had to pay a lot of taxes. And ultimately, it just didn't work out very well. I didn't realize this principle. Who, not how. It's all about the who's in your life that can help you figure out the hows so that you can stay in your unique ability and do what you're really good at. I didn't learn that until much, much later when I met the Ascendant financial team. I thought I had to figure it all out. But the point that I'm getting at is I later took a leap. I started to get into that personal development, and then I got into the financial industry, the insurance business. And I made the mistake of thinking that I was actually going to learn how to help people manage their debt and manage their income and do all these things. And it didn't quite go that way. I'm not taking any shots at the industry or my colleagues or anything like that. But what I found out is that if you're not selling product, you're going to die. That's just how it works. It wasn't really about helping people, although maybe some of those products could solve problems. It was all about just pushing those products and getting the business done. And I knew I was in the right industry, but I wasn't in the right process. I wasn't in the right team. So I struggled very hard for 6, 7, 8 years in the business, and I survived, which is good. But luckily for me, back in 2013, I discovered this book. And in 2013, I was new in the industry. I knew nothing about this business. I've been in the industry since 2011. I tried to take the shortcut. I didn't have a coach. I didn't have a mentor. And I just simply wasn't the human being that I needed to be. I didn't take responsibility, and I was not committed. So I continued to struggle until around 2016, when I passed the practitioner program, and I started to add policies to my system. And then fast forward to 2018, when I met one of my great friends and a dear colleague, Richard Canfield. He became my first mentor in the industry, or as it relates to the process of becoming your own banker. And that later introduced me to Jason, and I joined the Ascendant financial team. I've been here for 3 years now, and everything has just gotten better since then because I found the right who's to help me figure out the how. So ultimately, I would never change anything. I'm grateful for the experience that I had, but it was pretty painful at the time, and I wouldn't want to go back, but I'm grateful for it. So, and now I'm going to pour all that energy and all that learning into supporting you getting started as it relates to the process of becoming your own banker. And by the way, I'll just quickly share, at any point throughout the night, you might find yourself thinking, hey, you know what? I really want to learn more about the process of becoming your own banker. All you have to do is text the word schedule to 780-809-4599, the word schedule to that number, and we'll put you in touch with the right teammate who's going to help you along the way in your journey. Okay, maybe one of my teammates can put that in the chat. Now, this is a nice picture of a couple of great guys. That's Richard, actually, that I just mentioned. He's in the front there. That's Jason in the back, and that's me when I had almost an extra person on me. I was about 50 pounds heavier in that picture. My friend Starblow there in the middle, and great colleague, and David Schmeichel, a good friend of mine. So when I first started learning this process and I read Nelson's book, I've read this book many times, and there was a specific thing that kind of stood out to me that Nelson always used to say. He says, we cannot get a better rate of return by investing in anything without first controlling the banking function, okay, as it relates to our financing needs. Because we're trying to find a better rate of return, but we're working real hard and money's always flowing away. We're already someone else's great customer. We can actually implement the process of becoming our own banker and become our own good customer and have that money flow back to our family. And that's how you increase the rate of return. Most people believe that they need someone else to take care of their money. It's simply just not true. Most people believe that it is necessary to take risk in order to grow their money. And that's not true either. It's just not true. And we'll discover that as we go. Most people know next to nothing about the process of banking and its importance as it relates to their needs in their own life. Okay. And we're going to learn about this tonight. The truth is, and that's what you're here to discover, is the truth. Truth number one is the difference between you getting stressed and staying relaxed financially is who controls the banking function in your life. And as we go through this, just think about that for yourself. Who actually controls the banking function? Truth number two, you don't have to put your money in a prison for decades and rely on someone else to achieve the financial abundance that you deserve today. And I promise you, I'm living proof of that. Truth number three, you don't have to be rich to become your own banker, okay? It's not about getting started with a lot. It's about just getting started. That's the key. Now, important question. Who is this for? The process of becoming your own banker is for you. And that's exactly why you're on this call. We all need the process of banking in our life. We all have the need for the use of money. So becoming your own banker is for you. Now, how did the infinite banking concept get started? And this is what I was talking about earlier. You may recall, or you've heard stories, you know about the things that happened in the 1980s across, especially in North America. Inflation jumped and skyrocketed to 18%. You can see here in 1981, interest rates peaked at 21.5%. And that's exactly what happened to Nelson. Nelson was in the real estate business. He was doing very well, and he was getting used to paying 3, 4, 5% on his mortgages. And then overnight, basically, those payments that he had to make skyrocketed because 21.5% was prime. Well, he wasn't prime. So he was paying closer to 23% on those mortgages and servicing, I think, $500,000 or close to $800,000 worth of debt. That was a huge amount of money just to service that debt. So he was very stressed. This is one of the things that inspires me most about Nelson's story, is that he discovered this process through his own financial ruin, literally on his knees at night, begging God for a solution to his problem. And he didn't realize it at the time, but the problem was right under his nose. And so it took that pain to really get the creative juices flowing and for him to discover it. Now, everyone needs a heart. Would you agree? Now, I want to tell you a story. Back in, Jason might be able to remind me, I believe it was 1989, Nelson had a quarter bypass surgery. And they actually took his heart out of his chest, opened up the chest cavity, and then they had this machine called the heart and lung machine pumping the blood through his body to keep him alive. Now, of course, Nelson was heavily sedated, so he didn't remember anything that actually happened, but he thought about that process and he realized, he was alive, but he wasn't really living. He was merely surviving. There was a machine doing the job of his heart while the doctors did the good work that they had to do. Nelson actually discovered later on that by you not controlling the banking function in your own life, it's equivalent to you living off a heart and lung machine financially. Somebody needs to control the banking function, and that somebody should be you. Just like some machine needs to pump the blood through your body, and it should be your heart. Banking is the most important business in the world. Just think about that. Everything that we do financially today, whether you're paying off debt or you're making an investment or you're paying your light bill, everything that you do financially today starts with the foundation of banking. Nothing happens without banking. Okay, it's the most important business in the world. The banking system pumps money where it is needed. And at some point, some of that money flows through my hands and yours. And then where does it wind up? So the banking system's its job is to distribute money, and the money flows through our hands. And then it ends up somewhere. Where does it end up? Let's think about that for a second. It ends up right back in the banking system, right? Just like the globe. If you picture a globe, there's one pool of water, right? There's rivers and lakes and streams. There's the Indian Ocean, the Atlantic Ocean. But to think that those bodies of water are not connected, that just doesn't make sense. It's only one pool of water. That water gets picked up and it moves through the atmosphere, wind, sleet, snow, all that precipitation comes down. It flows through you and me, and it winds up right back in the ocean. There's only one system, and the banking system is no different. It doesn't matter that there's financial institutions, there's banks and insurance companies, different currencies, different denominations being managed all over the world, but there's actually only one pool, and all of that money winds up right back in the banking system. And the issue here is how much of that banking function do you control as it relates to your needs? How much do you control as it relates to your needs? Remember, there's only one pool of money in the world. Just like I said earlier, there's only one pool of money. So I get paid, I pay a bill, I do something. When I pay for a couch, I buy a couch. Well, what is that couch company, that sales company going to do with that money? I pay them, they're going to put that money right back in the commercial bank. The money always winds up right back in the banking system because there's only one pool. And what Nelson saw was he was pumping money into the pool in the wrong way. I'm doing all the work, someone else is getting all the money. All that money is flowing to someone else's bank. That's financial energy that bank is putting to work. And they're not sharing any of that profit with me. So he had to go through all the bankers and toll takers and gatekeepers where they were making money off of him, just like they're making money off of you, and they're abusing him, right? Has that ever happened to you? And how does that make you feel? It makes me feel not very good. He realized that what he needed to do was crank up large life insurance premiums. Well, you can't do that overnight. If we crank up large life insurance premiums, there's going to be cash value that's building in that policy. You own the contract. We're going to get into this more later, but you can access that money to achieve the same objectives that you're doing today, but someone else is controlling that entire process. We can't do that overnight. Everyone thought at the time that Nelson was crazy, including his wife, Mary. If he had all this debt, he had things that he had to solve. The brain immediately thinks instant gratification. If I have a windfall of cash come in and I owe someone else money and it's stressing me out, I should just take that hard-earned money and pay off the snakes and dragons. I should solve that problem. The problem with it is as soon as you pay that money, you're pumping the money into into the system in the wrong direction. It's permanently transferred away from you and your family forever. You can never get it back. Someone else has harnessed that financial energy for the rest of time. You have to get this done incrementally over time. So that's exactly what we're going to talk about. Don't try to get too much done in too little time. The time's going to go by anyway. So we need to take our time and implement the system over time. So there's 4 characters in the financial play. You and I are all depositors. Okay. Everyone's depositing money. We're earning an income, and that income must be deposited somewhere. We're all depositors. We're also all borrowers. And when I say we're all borrowers, I mean we're all using money. We're either borrowing money from somebody else's bank, or we're using our own cash. If we borrow money from someone else's bank, they're in control of that process and they get all the money. They get to dictate the terms. I now need to pay money back to them on a schedule, and that money flows away. We can see the cost. I'm borrowing money, I got to pay interest. This is an opportunity for you to start thinking differently. What do I mean by we're always using borrowed money? Well, even if you access your own cash, well, the reality of it is that money never actually existed in the first place. Okay. We know that the bank is actually increasing the money supply. But the point is, if you access that money that you worked hard for, and then you spend that money, we think that we're avoiding paying interest. Oh yeah, I paid cash for the car. I don't have to pay interest. But what Nelson taught us to look at is, okay, well, if you didn't pay interest, what did you give up? You actually gave up the opportunity to earn interest on that money had it been left in some kind of an interest-bearing account. So the minute you pay that money, and you transfer that energy away from you forever. So something for you to think about. We're always dealing with interest. You're either paying interest or you're giving up interest. It has to be reckoned with. There's also the 3rd character in the financial play is the banker. What does the banker do? Well, the banker is the one who's going to approve you. The banker is the one who's going to grant you access to that money. The banker is the one who's going to tell you the interest rate, when and how often and for how long you pay. They set all of the terms. And then there's the bank owner. Well, what's the bank owner do? Well, the bank owner is the one who receives all the money. The bank owner is the character in the financial play who's earning the most money. So the process of becoming your own banker actually allows you to become all 4 characters in the financial play. We're always going to continue to deposit. We're going to need to borrow and access capital. But as the policy owner, as the owner of the system, I'm the banker. I set all the terms. I set the repayment terms. I access the capital. And I'm also the bank owner. All that money flows right back to my family system so that we can use that money again and keep recycling it and turning it over. So the golden rule, okay, not, treat others how they want to be treated. This is the golden rule that Nelson taught us. People have, abdicated the responsibility or the opportunity as it pertains to the banking function in the economy. I can control the banking function, but someone else has taken it over. They're depending on someone else to perform that job. Somebody actually has to perform the job. And that character in the play is making most of the money, the bank owner. And rightly so, because of the golden rule. Those who have the gold make the rules. Simple as that. And the banks have convinced us that we need them. The person on the street in Canada today understands the subject so poorly that he's doing the equivalent of living off a heart and lung machine, just like what I said earlier. They just don't understand. We haven't been taught this. We don't understand the importance of the banking function or how it even works. Nobody ever stops to talk or think about the banking function, cash flow, who's getting the money, how does that all work? What I want to talk to you about today is how to create a system in which you can control everything about the banking function as it relates to your needs. Control the banking function as it relates to your needs. I showed this book earlier. Nelson, God bless him, he wrote this book for us after, from what I heard, being convinced by so many people who had been making a difference in their life by implementing this process. Is, look, you got to write a book. And he self-published it. And since then, there's been over 470,000 copies sold. Why do you suppose that is? It's really actually quite simple because it works, right? It's as simple as that. Now, you can get your copy. I would recommend that you head on over to ascendantfinancial.ca, go to our bookstore, and make sure you order yourself a copy of Nelson's book. If you're even thinking about or considering implementing the process of becoming your own banker, this is my absolute #1 teaching tool that I use for myself and my own family when we're talking about our system and how I coach my clients. The very first principle that must be understood is that you finance everything that you buy. That's on page 21 of Nelson's book, just like what I was saying earlier. Again, this is an opportunity for you to think differently. You finance everything that you buy. You either borrow money from somebody else and pay up interest, or you pay cash for something and then you give up the interest permanently that you otherwise could have earned. Everything that you do is a financing decision. Again, you either pay interest to someone else or you give up interest you otherwise could have earned. There are absolutely no exceptions to this. No exceptions. We can't get around it. The whole idea is to recapture the interest that one is paying to banks and finance companies for major items that you need during your lifetime. And I'm going to share a personal story about this later on to illustrate what's possible for you. The objective is to keep the money in your family. Think about that. Your kids or grandkids, yourself, we all have needs, right? And we're all earning money and then we're making payments. The money's flowing away. So your children are going to go and do the exact same thing, or your grandchildren are going to go and do the same things that you've done all throughout your lifetime. They need cars, they need homes, they're going to start businesses, they're going to get married, and that all requires capital. And just like Jason said at the beginning of the call, you can recapture all of that money. You can have all of that flowing back to you and your family. And the question is, how much of the banking function do you control as it relates to your needs? So you're going to hear me say things multiple times throughout the presentation because repetition is going to be our best teacher. You know, I've read this book about 10 times, and every single time I read it, I learn something new. Repetition. Your money must reside somewhere. The capital has to be deposited, and it must reside somewhere. Someone must perform the banking function in your life. It's an actual job that has to be done. That someone should be you. This process, this is a really important concept, okay? Because you might be sitting there thinking, gosh, this sounds like something that I'd really like to get into, but you know, I've got to become my own banker and stop doing something else, and stop putting money into cryptos, or stop putting money into the stock market, or into the RSPs, or investing in real estate. We have been taught that we live in a this or a that world. Becoming your own banker is not about becoming your own banker is not an either or. It's an and process. Okay, becoming your own banker is not about addressing a yield on an investment. It's all about how you go about financing things you need in your life, which certainly can include investments. Even if I deposit money toward an investment, that is a financing decision. And at the foundation of it, banking is there, right? I can't purchase investments without the process of banking. Now, let's talk a little bit about getting into the grocery store business. And I always kind of laugh because you're here to learn about the process of becoming your own banker, and you're looking at this going, getting into the grocery store business. Like, why am I talking about getting into the grocery store business if I'm here to learn about banking? Well, getting into the grocery store business, this is why Nelson uses this analogy. We want to consider a business in which you are both a consumer as well as the seller of the product. Sounds a little bit like banking, right? We're a consumer. We need the function of banking. Your market is unlimited. Everyone uses groceries, just like everyone uses the process of banking. Everyone has the need for the use of money. Someone has to perform the function of distribution, just like banking. Someone actually has to perform that function. Now, first thing that you need to do is we need to study the business for a number of years. We need to learn. We need to understand. The process of becoming your own banker is no different. That's why you're here tonight, to learn about the process of becoming your own banker and learn the banking business. When it comes to purchase or getting into the grocery store business, you need to purchase a superior location. Grocery store business is all about real estate. What did Nelson say? There's 3 rules: location, 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 right? Build an attractive building, right? Because if the building doesn't look very good, you're not going to attract very many customers. We need to stock the shelves with high quality merchandise. The reality of it is now the job is to move that inventory. You must turn the inventory 15 times just to break even in the grocery store business. If you turn it 17 times, you're going to be profitable. You're going to start to develop a profit. And if you can turn the inventory 20 times per year, you can maybe retire early. How does the function of the grocery store work? We're going to use, sorry, Sarbo, I don't have my can of peas here, but we're going to use cans of peas as our illustrative example of the inventory. The inventory obviously is going to come into the grocery store in through the back door, and then we're going to stock these shelves, and the customers are going to go up and down the aisles, and then they're going to go out the front door past the cash register, just like that. Now, we're going to sell the can of peas for 60 cents per can of peas, okay? And now, what's going to happen is more groceries are going to come through, or more inventory rather is going to come through the back door so that we can keep turning that inventory over and stocking those shelves. And we're going to purchase the inventory for 57 cents. Okay, so the profit margin is very low. In my family, I'm blessed and lucky enough to say that my wife does the grocery shopping. Because if I did the grocery shopping, that probably wouldn't turn out very good for my family. So now here we are, we own our grocery store. We're shopping at our own grocery store. Now, my question for you is, you're the business owner. You can do what you want to do. And let's assume that you're going through the aisles here and you're filling up your grocery cart and you have all your groceries. My question is, because you can do what you want to do as the business owner, are you going to go out the front door, past the cash register, like all the other customers, or are you going to go out the back door? Those of you who are saying front door, you're bang on. Now, for those of you who are saying back door, I want you just to think about this for a moment. If we're the business owner, we bought the inventory already at 57 cents, but if we then take that inventory in the grocery store and we go out the back door, well, now how many more cans of peas do you have to sell to make up for the 3 cents that didn't go into the cash register? You have to sell 20 cans of peas just to make up for what you used. And that cost has to come from somewhere. It's going to come from your customers. So you have to sell that much more inventory just to get back on track. The business owner convinces themselves that, hey, because I'm the business owner, I can use the product, but that I don't have to pay the retail cost for it. And it's a bad mistake. Think about the business owner down the road who's going out the back door for the next 15 or 20 years. How much more profitable is your business going to be? How much better is the books going to look if you're going out the front door all that time? And the other thing to think about is if you're going out the back door, what are your employees going to see you doing? They're going to see you going out the back door, and they're going to start following your lead. The biggest thieves, if you will, in the retail business are actually the employees. They're responsible for most of the theft. So in other words, your family, if they see what you're up to, if you're not being a responsible banker with your policy system, then they're going to do the same thing. If you're accessing policy loans and not paying those loans back, they're going to do the exact same thing as you. What Nelson taught us is if you go out the front door, you pay your 60 cents. Well, what would happen if we actually put an extra couple of cents in the cash register? What if I could charge myself 60 cents? What if I put in 62 cents? What if I paid back more to the business than what they're asking for? It's just putting more energy into my own business so I can purchase more inventory to sell to more captive customers to create even more profit. So it's all about thinking differently. The money's got to flow somewhere. It may as well be you and your business that receives it. Now, once you understand the grocery store example, the rest of the process of becoming your own banker is ridiculously simple. As Nelson would say, don't steal the peas. Simple as that. Here's the problem. Wherever wealth resides, someone will try to steal it. So we'll look at a couple of headlines here. I want to save the economy. Let's start with the 150 billion that Canadians saved during the pandemic. Toronto Star, December 1st, 2020. Deficit will rise to close to 382 billion with a B. Financial Post, November 30th, 2020. Statistics Canada is about to be required to have Canada's 9 largest banks and credit unions turn over highly sensitive data about their customers and not tell the customers. That means every mortgage payment, every deposit, every bill payment, overdraft fee, credit card fee, and more. Essentially, your life will be laid to bear for government bureaucrats to look over. Toronto Sun, October 29th, 2018. COVID-19 bill will give the Liberal government, will give the Liberals power to raise taxes without parliamentary approval until the end of 2021. National Post, March 24th, 2020. The question is, who is the banker in your life today? Now let's examine. You earn an income, okay? You're going to work, you're working hard, you're earning income. Your income gets deposited. It must get deposited into someone else's bank. Okay, so you're doing all the work, you're depositing that money, you're capitalizing someone else's bank, and then you go and you access that money to live your life, to pay your bills and do everything that you need to do. In other words, you're doing all the work and someone else is getting all of your money. Think about it for a second. How does that make you feel? I got to tell you, it frustrates the heck out of me. It's very frustrating. The good news is I've discovered the process of becoming your own banker. Does it make you feel like this? Jim Carrey is literally my favorite actor. He's awesome. Okay, so now what we're going to do is we're going to talk about financing. Okay, how do we go about financing things in our life? There's two types of people out there. There's two ways to finance things. There's the debtor and there's the saver. Okay, so I'm just going to use an example of, let's just say, cars. We know that Canadians love their cars. We love our car payments. We get all kinds of cars. Now, let's examine the debtor. What do? We start at zero and we drop down negative because we borrowed money, our $20, $30, $40, $50,000 that we borrowed for the vehicle. And then what happens is you start working very hard, blood, sweat, and tears at your job, just so that you can make payments to someone else's bank, and you go up the step ladder for 5, 6, 8 years, however long, to pay off that debt, just so you can arrive where? Right back at zero with an older vehicle, probably needing a new vehicle. And not to mention, everybody likes to look good. Maybe by that time you're making a little bit more money. Maybe you end up going into a little bit more debt and getting an even nicer car, just so that you can drive it around, go to work, to earn the money, to pay for the car, to pay for the house, so it can all flow away from you and you can do it all over again. And you start climbing up the ladder. And then what happens here? Somewhere around year 3, you get sick, you get hurt, you lose a job, a family member needs help. Something occurs in your life. Life happens and you can't make a payment. You don't actually own anything until it's been paid off. It's not your car. What they're going to do is they're going to come and get your stuff. And that's not a very comfortable position to be in, because someone else has all the control and you float all that money away from you. It's gone. This person, the debtor, actually sees the interest because it's a part of their payment. They'll look at their financing and they'll say, okay, yeah, I'm buying a 40,000 or whatever it is vehicle, and I got to pay back, 46 or whatever. They see it and they know what it is. Now let's talk about the saver. The saver says, no, you're not going to get me. I'm not making payments to someone else and I'm not paying interest. Okay, so what the saver does is they start piling up money. Where are they piling up that money? In someone else's bank, and that bank's putting that money to work. But they're piling up money in someone else's bank until they achieve the objective of, they have enough capital available in that bank so that they can go and access the money. And now they're going to pay cash for their car. They're going to say, okay, I'm going to make one balloon payment one time. So it's still a payment. They're going to make that payment, and then that they've convinced themselves that they've saved on all that interest. Awesome. I don't have to pay interest to somebody else, and I don't have to make a payment. But if we paid all that money for the car and we drained our savings down to zero, we're going to need a new car eventually, or some other life expense. So what do? Well, we go right back to work and we start piling up money for that next big major expense. Gosh, that looks a lot like a mirror image of the top one. Those deposits look a lot like payments. You're never going to escape the payments. You're just making that payment into somebody else's bank so that you can pile up that money, and life might happen. You might get interrupted on your way to achieve that goal. You might have to access that money and do something else. But the point is, up we go and down we go, up we go and down we go. And we fast forward all the way to the end, and the saver doesn't really wind up in a much better position than the debtor. And the problem with that is, for the saver, is this person, the saver, does not see the interest that they're giving up the opportunity to earn. That's opportunity cost. They actually don't see it. They never even consider it. They just see the interest that they think they avoided paying, and they think that they won. It's absurd. Now, both methods are a permanent transfer away from you. Whether I'm making payments on a car payment, or I take a balloon payment and pay for my vehicle and start putting money back in someone else's bank, as soon as I pay that money, it's gone. Every payment that you make is a deposit in someone else's bank. If I'm paying Ford Credit Canada, it's going to someone else's bank. If I'm depositing into the commercial bank to save for the next car, it's going to someone else's bank. What's the solution? The solution is becoming your own banker, the infinite banking concept. Again, your money, it must reside somewhere. It must reside somewhere. Right now, you think that the only place to store capital is in a commercial bank. Let's do a bit of a fun thought experiment, okay? And if you could invent, you actually get to take your magic wand and invent a type of asset. Now, from scratch, this is out of nowhere. Okay, now the only conditions here is that it can have no drawbacks. What would it look like? Just of some of the most popular responses that we've gotten from the past. So high rate of return, consistent rate of return, conservative and safe, low risk. We have liquid, guaranteed. Oh, we're hearing tax benefits. I'm hearing a lot of what everyone's saying. No market volatility, yields income besides capital gains. Creditor protect, oh, that's a good one. Inflation protection, control, transferable, easy to manage, no hidden fees or penalties, reputable, so well known, and private. I think that's really great. Now, for your own various assets, I want you to simply identify which features from the list that they do well on, and which features from the list do they fail to satisfy. Just take a minute to think about that. Where you're storing your own capital, the assets that you have, which attributes from the list do they do well on, and where do they fail? Now, I've got a surprise for you. The list of attributes that we just reviewed most accurately describes a participating, dividend-paying whole life policy. So let's dissect this for a moment. Let's talk about participating, dividend-paying whole life policies. Well, participating in what? You become a part owner in the life insurance company. When we're talking about what's called a mutual insurance company, you become a part owner in the company and you participate in the profits generated from every line of business. So the only way to become a co-owner in a mutual insurance company is by owning a permanent participating dividend paying whole life policy. If you had $1 million and you said, hey, I want to buy some stock, they'd say you can't do that. The only way to become a co-owner is by owning a permanent participating whole life policy. Well, dividend paying. Each year, the life insurance company declares a dividend. It's contractually guaranteed to be paid to the participating policy owner, and it can never be repossessed or lose value. So it's immediately vested once it's paid into the policy. Start thinking for yourself, how many guarantees are there out there in the world today? Not a whole lot. Whole life. Well, that's really quite self-explanatory. You're the life insured for your whole life to age 100. The total cash value, this is a really key point, okay? The total cash value of the policy must equal the total death benefit by age 100. Every day that you age, the total cash value rises. The policy cannot lose value. So every single day that I wake up, just because I took air into my lungs today, my policy cash values increased, giving me and my family more access to capital today than we had yesterday. My checking account is not doing that. Now, we don't have very many financial guarantees anymore. Pensions are going by the wayside. There's doubt in the future. However, dividend paying life insurance can help create peace of mind and unmatched financial security. And here's how. Cash value begins to accumulate immediately, and it's contractually guaranteed to grow daily, every single day. It's a lot of days going by here. Cash value cannot go down. Easy to access. So easy to access and control over a growing pool of financial value that you can use to take advantage of opportunities that will track you down. Imagine that, a growing pool of financial value that you can access. Amazing. You're not penalized for accessing it early like you are with an RRSP or other financial products. There is no, there are several tax advantages, both personally and corporately. It provides a growing death benefit, which is paid to your named beneficiaries income tax-free. So I've been able to set up a policy system for myself and my family, and now I know that my legacy is secured because I'm going to be around for a very long time and live a long, healthy life, and my policy system will continue to grow. But if in the unlikely event, God forbid, I become an angel prematurely, I don't have a lease on life, I don't have a crystal ball, I don't know when my time will end, but I've now made sure that my family will never have a bad financial day as long as I'm here or after I'm gone. You are your greatest advantage. I said this earlier, you're already a really good customer for someone else's bank. If you think back to the debtor saver slide that I shared earlier, now keep in mind, this is just a visual that this line is going below the black line here. But just like the earlier slide, what's happening here, our zero, that's representing the cash value in the policy. It starts at zero and it grows, it rises every single day, and it continues to go on this curve. In fact, it should look more like this. It should go more like this way, but it grows and it rises every single day. Now you'll notice that this green line here continues to rise, even though we have this red line. What this red line represents is it represents an opportunity or a need. I used an example of car financing earlier. So we're capitalizing a policy. We're making deposits either monthly or annually for a period of time. Cash value is rising every single day, and it's going to grow and accumulate and compound. And eventually an opportunity or a situation, a problem that you need to solve is going to show up. Now you're contractually guaranteed to be able to borrow up to 90% of the total cash value anytime you ask for it. Now, we can borrow that cash value. So we're going down, we borrowed a loan. And now what we're doing here is we're making payments back to our policy system. Now, remember earlier when I talked about the 4 characters in the financial play, we're depositing money into the policy, deposits. It's growing. Well, we have a need. So we access money via policy loan. We're the borrower, go and access the car or whatever it is, solve that objective. And now we own the contract. We're the sole legal owner of the contract. The life insurance company is obligated to fulfill all of the contractual obligations. We just need to deposit premium, which we're already depositing all of our money in someone else's bank anyway. So that's pretty easy. So we keep depositing premium, but now because we're the owner of the contract, we are the ones who are contractually guaranteed to access up to 90% of the cash value on our terms, i.e. third character, we're the banker. So now I get to decide what my repayment schedule is going to be. It's completely up to me. If I have that problem, that interruption, like I said earlier, if I create my own repayment schedule, if I need to deploy cash elsewhere, or God forbid something happens badly, I can just simply pause my payments if I like, and I can come back and start making those payments again. All the while I'm accessing that cash and repaying it, I'm not actually interrupting the compounded growth on the cash value inside the policy. And as I'm paying back my loan, you can see here the cash value is growing. As I'm paying back the loan, I always have access to more and more cash. I have access to the sandwich in the middle between the balance of what I owe and the amount of cash value that's in there. And as I pay down that loan balance and my cash value grows, I'm always getting access to more and more cash as time goes on, and the time's going to go by anyway. I can pay back that loan, and I don't have to finish that entire loan payment. I don't have to pay back the entire loan before I can go back and re-access money again. Now, important caveat here, that's not to be mistaken with, oh, I'll just stop making payments. I'm going to continue to make my loan repayments and fulfill on my loan payment schedule. But while I'm making those payments, I can still go back and re-access money to take advantage of another opportunity to either decrease my outflow or increase my income, increase my cash flow. That's the idea, is lower my expenses and increase my cash flow, have more and more capital available to pump back into my policy system and build a bigger system and continue to grow more policies. Create your own banking system. Now, the good news is you're not alone. You have my great team here, myself, we're here to support you. And we also have our great teacher, our Nelson Nash. He left us some golden rules for us to follow. And we teach this process to the letter, just like Nelson taught us. So we're very rigorous with how we coach this, because you know what? If you try to get too much done in too little time or bite off more than you can chew, you're just going to hurt yourself. You're just going to kill your own entity. Now, we got to think long range. You may know that Nelson started as a forester. At one point in his life, he was a forester. He was trained as a forester, and he was trained to think 75 years into the future. I've got policies today on my own life, my wife's life, and on my kids. My kids are just young, 14 and 11. I'm already thinking about my unborn grandkids and great grandkids that may not ever show up, or they're long from being here. So think long range. Don't be afraid to capitalize. Do not be afraid to capitalize. The money must reside somewhere. The money has to be deposited. I'm aggressively growing my system today because I'm never going to be 37 years young again. I can't go back in time. When I'm later on in life, if I didn't start more policies at this age, I'd be kicking myself in my 40s, 50s, and 60s going, gosh, don't be afraid to capitalize. The more energy I put into my system, the harder it's going to work. And the faster I'm going to be able to accomplish the objectives that I want to accomplish, again, without biting off more than I can chew. We got to make sure that what we create is sustainable. Don't steal the peas. If I'm going to access policy loans from my own system to achieve an objective, I must create my own repayment schedule. Because if I borrowed money from a commercial bank, we know we're good, hardworking Canadians. We pay our bills. If I borrow money from a commercial bank, I'm going to make my payments. So it's no different with your own policy system, although you do have the advantage of, controlling that payment, ratcheting it up, ratcheting it down, or pressing the pause button if you needed to, but don't steal the peas. Don't do business with banks, because unknowingly and unwillingly, when we borrow money from the commercial bank, we're actually contributing to the inflation problem, because the bank is creating money out of thin air by creating loans. That's how new money comes into the system. We think that inflation is this natural occurring thing, but it's actually a part of the banking problem. They're driving down the value of the dollar and driving up the cost of goods just by the fractional reserve banking system. Now, this is a fifth golden rule that Nelson added later on in life, and this is such a good one. Rethink your thinking. I may butcher this quote, but Nelson said that rarely does a person think, and maybe it wasn't Nelson that created this quote. He said that a man would rather die than think, because sometimes when you start thinking about things, you got to get responsible, and people just avoid it and they just keep on going, face down, butt up, work hard, and don't even think about it. Don't worry about it. You can't win, right? No, not true. Rethink your thinking, examine things, think about it, take your time, follow the money. So for individuals and families, I'm going to go ahead here and share a different screen in a moment. I'm going to, I'm going to share some testimonials. This is actually one of Jason's clients that I'm going to share about. His name's Dave Klein. David is someone who completed a class a few years ago, and by now it's not a few years ago, it's many years ago now. And here's the question he asked me, and by me, I mean Jason. Can you, can you take a look at my financial situation and help me implement becoming your own banker in my life? And here's what happened since. I absolutely love this story. So just bear with me for a moment. 2 years after opening our first policy, we took out our first policy loan and paid off a bank loan on my wife's Subaru, redirecting the payments from the commercial bank to our family bank. So that right there is key and critical, redirecting the payments. The payments were already flowing away. Now I can redirect them back to our family bank. 3 years later, so 5 years in now, we took out another policy loan and skipped the bank entirely this time, using the money to buy me a brand new SUV outright. Imagine that. So again, I'm going to create a repayment schedule. We would have paid for the SUV and made payments to them. Let's create a loan repayment schedule coming back to the family bank. In the 5th year, we also had another child and took out a policy on him. I already mentioned that earlier. I have policies on my own kids, as well as a second policy on myself. That's Dave. With 5 policies now in force, after 7 years, our mortgage was coming up for renewal. Instead of renewing with the bank, we took out policy loans from each of our 5 policies and paid off our mortgage. So imagine that, paid off their mortgage early so that they could redirect all those payments and recapture all those payments and that financial energy that was flowing to someone else's bank. That is like extremely powerful. Okay, great. That's a great testimonial. Now, the most common question that I get is, Vern, can we connect with the right person on your team to take a look at my financial situation and show me how to become my own banker? Well, the answer is yes, you're absolutely in the right place. You have a becoming your own banker call designed just for that. So a part of the webinar tonight, a part of the offering is you just get a complimentary becoming your own banker call. It's just a discovery call to create clarity. You're going to have questions after this. So I encourage you, take the time right now. And you would have received, I believe, I could be wrong about this, but I would believe you would either received a text, an email, or both that would have a link to do this as well. But you can also text the word schedule to 780-809-4599 to reserve a date and time that works best for you. So again, text the word schedule to 780-809-4599. And I know one of my good colleagues will put that number in the chat, okay? I know, and you should know deep down, that you are capable of becoming your own banker. You absolutely can do this. Here's the follow-up that you can expect from us, okay? We'll stay in touch via email. We like to stay in communication. Effective and frequent communication is what we do here at Ascendant Financial. And obviously you can unsubscribe at any time. It's completely up to you. You'll receive an invite to schedule a date and time to meet. If we don't hear from you, the right advisor on our team will extend a courtesy call to find a mutual and convenient date and time to meet. And if you prefer not to meet, simply just let us know. And as long as you leave happy, that's okay. You're in total and absolute control. It's completely up to you. I'm going to go and read another testimonial here. So Alan Antonio, Alan is someone who heard me speak, me being Jason. This is one of Jason's clients, in a presentation just like this one. And when he had an opportunity to get the book, Becoming Your Own Banker, he went through our website, ordered his copy, scheduled a call, and implemented the process. Here's what he's been able to achieve. After 3 years of building our policies, we already had acquired enough cash value that we could withdraw enough money from our policies to pay off the bank mortgages on our real estate properties 13 years early. So they were able to pay off their properties 13 years early. All of that rental income is coming into them now. Think about real estate. You're the first one in the deal. The bank's the first one to get paid. Well, they paid off the bank early. So all of that mortgage payment and the additional cash flow over above that they were making, all of that now is coming back to their system. That was a huge accomplishment, knowing that we were now really using IBC, the infinite banking concept, as it was intended. When our oldest daughter and son-in-law decided to purchase their own home, they were able to access a policy loan from her policy that we had started, and also funds from our policy, concept of family banking. She's going to make the payments anyway. She may as well make them back to the family, to buy their home as a cash deal and not have not have a mortgage from the traditional bank. Imagine that. Who's applied for a mortgage? Credit checks, income verification, jumping through all the hoops, the stress, the burden, the annoyance. Yeah, you get the job done, but what a pain in the butt it is. And then you got to pay all that money to someone else's bank. Not so for Alan Antonio and his family. Currently, they're making payments back to us for the loan instead of the bank, thus keeping with the idea of keeping the money in the family. More and more capital flowing back to the family and keeping that wealth in the family. Such a powerful story. Alan Antonio can do this, and so can you. Let's compare how 99% of Canadians, the Canadian public buy cars to becoming your own banker. So we're going to take a look at what do most people do and how does becoming your own banker relate to the same process of financing cars. Each of these methods require a payment, a consistent transfer of capital away from you. So one way is the no purchase plan. So leasing, you're just making a payment so that you can basically long-term rent a car. The post-purchase plan, which is financing. You don't own anything until the final payment. As I said earlier, it doesn't matter where you're at in that payment schedule. If you start missing payments, they're going to come and get your stuff and you lose all that equity. A pre-purchase plan payment, saving cash, spending cash. So saving the cash and spending the cash. And where are we saving it? In someone else's bank. Now, with each method above, who's getting all of the money? The answer, someone else's bank. Al Bundy's like, what? That hurts. Who's getting the money? Think about it. Where's that money flowing? That financial energy is flowing away, and they're putting that money to work to grow that profit for someone else's family, not yours, but you're the one doing all the work. That should make you feel like Al. Now, a couple questions. How many vehicles have you and your family purchased in your lifetime, either cash, leased, or financed? How many more vehicles are you and your family planning to buy for the remainder of your lifetime? Probably going to continue to buy vehicles. What if you could redirect that $2.5 million back to a system that you own and you control? How much further ahead is that going to put you and your family in your later years in life, where you get to enjoy and you slow down a little bit, not much more capital in your passive income or retirement years, and to be able to pass on to the next generation to continue to grow and increase your wealth? People are likely to spend more money financing vehicles throughout their lifetime than they will ever save for retirement. Just let that sink in. People are wondering why they're not doing well financially today. They're retiring with less money. They're retiring with debt because they're spending so much money on the things that we need throughout our lifetime and just flowing that money away. And it can all be coming back. Now, I'm going to go ahead and share a personal story with you here. I'll take you back to January of 2019. So literally January 1st or 2nd, January 2nd or 3rd, 2019, 3 years ago, I had a 12-year-old Toyota Matrix and a 10-year-old, what's that called? A Mazda 5. Okay, a little tiny little minivan with a sliding door thing. The Toyota Matrix still had a little bit of life into it, so I literally just gave that to my brother-in-law. And I needed a new vehicle because I'm not really good with cars and all that fun stuff. The Mazda 5, actually, if I take you to June 2020, I don't know if there's any Calgarians here, but I'm up by the airport in Calgary, and we absolutely got smashed by a massive hailstorm. Wrecked my house, cost $17,000 of damage to my truck, and it rode off the Mazda 5 that was just sitting there that we were trying to figure out what we wanted to do with anyway. So it kind of worked out in our favor. Mother Nature came and took care of that problem for us. It was a write-off, and the insurance company gave us like $4,500 for that vehicle. So that was fine. They dragged it away and it was nice. But I needed a vehicle, something reliable and safe for my family back in 2019, January. So what I did was, my financial situation was far different at that time. And I thought, okay, I'm still capitalizing and building my system and adding policies and gaining momentum. What I need to do is I need to figure out a way to solve this problem, to get my family a reliable vehicle that we need with keeping the least amount of money flowing away from me. So I went over to the Ford dealership in Airdrie and I sat down with the guy and I said, look, I got $300 bi-weekly for you, man. What can we do? So, he worked his magic, and I said, hey, let's stretch that loan way out. How far can we stretch that loan? Normally really bad advice, right? But I wanted to keep the payment low because I knew something that Ford Credit Canada did not know. I stretched the loan out to 8 years and I kept the payment really low. So I got a decent vehicle. It was a 2018 Ford F-150 that somebody didn't pick up. So I bought that in 2019. So it was a brand new vehicle, but it was a year old. So I immediately got kind of a deal on that, stretched out the loan, and had a pretty manageable payment. But every single time $299.37 came out of my bank account bi-weekly, I got nauseous. it was very frustrating, but I just kept with the process, beating down the loan a little bit, permanently transferring that money away, but kept building up my banking system. So August 2021, Vern decided to buy out this vehicle. So the balance of my loan at that time was $34,000. So I borrowed money from my own policy system. It was hilarious. I called up Ford Credit Canada. I said, hey, can I get my biweekly payments stopped, please? They said, come again. I said, well, can I just send you the money to pay out the balance of the vehicle? I think it's around $34,000. And they said, well, yeah, you can do that if you wanted to. I said, great, make sure you stop that payment. They said, okay. So I called up TD, which is my commercial bank. And I said, hey, is there any limit to how much money I can pay toward a bill in one day? They said, no, you can transfer $10,000 through e-transfer, but you could pay up to $500,000 if you wanted for a bill payment. I said, great. So then I went through the process of accessing a policy loan from my system without interrupting the growth of my policy cash value. I accessed that money, which is the insurance company's money, not mine, because mine's growing inside the policy. I sent that to Ford Credit Canada. So I paid off the vehicle balance 5.5 years early, redirecting all those payments back to my family system. And I got to tell you, when you look at your bank tonight, because I know you will, when you look at your bank accounts, take a look at your debit to deposit ratio. It's painful. My debit to deposit ratio has dramatically shifted since I have controlled the banking function as it relates to our needs. I have very little automatic debits coming out of my bank account. I control everything. I control all of the repayment schedules, and everything's coming back to me and my family. So what were the purchase options? Pay cash, finance, or lease, or now becoming your own banker. That's exactly what I chose to do. So I was able to solve the objective, and I used the process of becoming my own banker, or your own banker, to pay off the vehicle early and redirect all those payments. What is the lost opportunity cost of choosing one option over another? Paying cash, leasing, or financing? It's all a permanent transfer of money away from you. So now let's examine a little bit further the process. So I capitalize my policy system. Don't be afraid to capitalize. The more aggressively I capitalize my system, the quicker I can recapture all that debt and turn my liabilities into assets. The money must reside somewhere. It's got to flow. I requested a policy loan for $34,000 using my cash value as collateral. So I'm borrowing against the value. I'm not withdrawing anything. Don't do business with banks. The insurance company placed a lien on the death benefit for the balance of the loan, while 100% of my cash value continues to grow daily, uninterrupted. So they use my cash value as collateral, and they put a lien against the death benefit. God forbid I become an angel today, the death benefit will pay out and it will wipe out the policy loan, and the rest will flow to my family tax-free. I control the repayment schedule and decided to repay my policy loan at a rate of $700 per month over 60 months. So I said to you earlier, I was doing bi-weekly payments of $300. I increased my own payment because I'm just sending more money back to my own system anyway that I get to reuse and use again. So for every loan payment of $700 that I make to my own banking system, I'm actually able to go back and re-access $1,000 from my policy. Now take a minute to just let that sink in and think about what I just shared. Let this sit with you. Don't steal the peas. Remember, my cash value is growing every single day in the policy, giving me access to more and more capital. Plus I'm making payments that otherwise were flowing to somebody else. So now I'm actually able to go back and re-access more than what I'm paying back. Heaven forbid, if something should happen to me, I just shared this. My family will receive the death benefit minus the loan outstanding, and I still own the truck. Think long range. God forbid something happens to me, nothing's going to happen to my truck. My wife, well, obviously she'll spend many, many, many years grieving after losing the man of her dreams, of course, but she won't have a bad financial day while doing that. Where did the money come from to buy the truck out? Who owns the truck? And who's got all the money? I have the truck, I have the control, I get the money, I get the uninterrupted growth, and I get to just keep on repeating the process. Now, what happens if I choose to stop or modify the policy loan repayment schedule? It's completely up to me. I get to do whatever I like to do. So I can increase it if I want, I can decrease it if I want, or I can stop it if I like to. How much of the money that I put toward my policy loan repayment can I use again? All of it. The insurance company is going to charge me a very nominal, simple interest rate. I wish they would increase the interest rate because it would just give me more capital and put more money to work in the insurance company. But the point is they're not going to lend me that money for free. They're going to charge interest. But every single penny that I pay back to the insurance company as interest is being put to work for me and all of the other co-owners in the business to increase the profits. But not only that, I actually get to go back and re-access all of the money that I pay, not just the principal, but the interest as well. So an ever increasing pool of financial value. I get the truck, I have all the money, and I recapture all of the interest. It's pretty good. Now, here's a really important question. If you can do this for cars, is there anything that you can't do this for? Rethink your thinking. Here, Sarblo, let's think about this for a second. So I build up my policy value. I access a policy loan. I pay off the truck. And now the payment that I was sending away is now coming back to me. When I think about that, I kind of think about investing, Sarblo. I'm going, okay, if I take a bunch of my hard-earned money, and I don't care what the investment is, and I'm not knocking any investments. I just want you to follow me here for a second. And Sarblo, play with me a bit. I go, okay, I take that money and I put it, let's just say a piece of real estate, right, Sarblo? Mm-hmm. I take 40, 50, 60 grand, whatever that is. I have all the risk. I put the money into the real estate. Let's say it's a rental. I'm going to ask you a dumb question, Sarblo. Why are people buying cash flow real estate?
Because cash flow is king.
Cash flow is king, right? Money coming in. If I can buy enough cash flowing assets to meet my needs for financing in life, meet my living expenses, then I have the option to a work optional lifestyle, right?
Yep.
So that's a pretty smart, logical thing to do. Now, let's go back to my truck example for a second, Sarblo. If I'm paying money to someone else and money's flowing away, if I can take capital from my system and make a payment and recapture that debt, and I'm a responsible banker and I don't steal the peas, and I redirect the payment back to me and my family, is that any different really than a cash flow investment?
No, you just having the cash coming back is an asset. Having the cash leaving is a liability. So
absolutely. So I just took my liability and I transformed it into an asset, and I'm recapturing the stream of payments that I was already planning to make to somebody else anyway. So, and then Sarblo, if I did that for my vehicle, couldn't I do that for the same cash flow real estate or private lending or cryptos or RSPs or anything that I'm already doing financially today? Can I use my policy system to finance anything that I want to achieve in life?
absolutely, you can. Nelson says that best in the title of the book.
That's right. I cannot get a better rate of return on anything without first controlling the financing function, the banking function as it relates to my needs. So if I could take premium, Sarblo, and deposit it into a policy system, cash value is growing every single day. So I'm putting my premium in, my 30, 40, 50 grand, whatever that number is for you. I'm depositing that in the policy. Now I access a loan. I acquire an investment. Let's assume that there's cash flow or growth inside the investment. And then my cash flow is doing what every day, Sarblo?
It's going up.
So am I not growing my money in two different places for the same deposit?
You sure are.
Is there anything stupid about doing that?
Nope.
I don't think so. And one last quick question, Sarblo. If I can do this for myself and my immediate family, my wife and my kids, is there anything stopping me from being the banker for someone else?
Nope. Anybody who has the need for cash, you can certainly take over the banking function for them and have the money flowing back to your system versus leaving it and create more assets for yourselves.
I could, couldn't I? When I access a policy loan, do I have to pay interest? Oh, I actually just talked about this. Absolutely. Okay. I have to pay interest. So again, I want you to put on your business owner thinking cap for a moment and just bear with me for a moment. If you and I were business partners and we acquired some retained earnings, we built up some capital in our business, and they came down the hallway and I knocked on your door. I probably would be doing it virtually over Zoom, but you get what I'm saying. I knock on your door and then I say, hey, Jason, Sarblo, Roman, whoever the business partner is, I say, I have an opportunity that I want to take advantage of, or I have a problem that I need to solve. I see that we have some business in our corporate account here. You and I are business partners. I ask you to borrow money from the business. The question is, are you going to let me access that money from our business for free?
Well, we should not, because that beats the purpose of the business, which is to be profitable.
Because if I access money from the business and I do it for free, I'm losing money every day on inflation or whatever. But the point is that money is no longer in our business being put to work to help us grow the business and grow more profit. So if I access money from my own business, I better darn well put more money back into the business than what I took out. Don't steal the peas. It's no different with the life insurance company. So they're going to charge us interest when we access a policy loan. But the question becomes, again, who has control? Who's the money being put to work for? Who gets to reaccess that cash? Right? And who gets to participate in that growth? It's all over here by controlling the banking function. So yeah, we're going to pay interest, but I get to reaccess all that interest again. So it's just saving more money back into a system that I own and I control. So I'm not really concerned about it. So this is a personal guaranteed retirement solution. So we can use this process or these policy tools to implement the process of becoming your own banker. But I've got a case study that I want to share, because I can actually create myself a retirement solution if that's a specific objective that I have using this tool, or I can be building up my policy system and using it for the financing function, all the while knowing that I'm building it up and creating momentum such that I can use it still for a guaranteed retirement solution. So Nasia is 45 years young. Her objective specifically was to have $39,000 of net annual retirement income from age 65 to age 90. So 39,000 net income. She deposited $30,000 into her dividend-paying par, meaning participating, life policy per year for 10 years. Now, I want to just make a mention here. The way that I design my policies is such that I can deposit premium until age 100. I want to have the option to continue to deposit premium long into life, because the money has to be deposited somewhere. I may as well deposit it into my own bank. However, Nasia here had a specific objective, because she had a specific dollar amount that she wanted to transfer into the policies over a certain number of years. And that was $30,000 per year over 10 years. The total, $300,000 into the policy. From age 65 to age 90, Nasia accesses $39,827 per year, tax-free. I say that again, tax-free. The total, $1,035,502 out. So $300,000 in, more than 3 times that amount out. Nasia passes away at age 91 and leaves $586,682 to her beneficiaries, income tax-free. Holy smokes. So we're up to about 1.6 million now. So 300,000 in and 1.6 million out. Now ask yourself, this is a really good one. Ask yourself, is it easier to save $300,000 inside a policy or to accumulate $1,035,502 inside a mutual fund or RSP? So you're already flowing lots and lots of money into various different places anyway. It's pretty easy to save that money into a deposit that is premium in a policy. Now, let's talk about business owners. This is Tim Dawson. He's a senior partner and a CPA at MMP. And now this is Jason's accountant here. And he says, this is what he said to Jason. He wrote this in a letter, I believe. He said, "Thanks, Jason, for continually pushing me in this direction." So, you have to learn new ideas. And Jason just continued to coach Tim along. And he said, over the past number of months, Jason and I have spent numerous hours identifying clients who we saw a specific need or opportunity. Then the process started. I was so impressed with the dialogue that Jason created and how easy it was for him to explain the benefits of permanent insurance. And my clients got it. Not only did they walk away with a different perspective of insurance, seeing it as an asset and not an expense. So let that sink in. It's an asset, not an expense. Our relationship strengthened as well. I would not hesitate to put Jason in front of anyone. He really is the expert in this field. And I think Jason would say the same thing, that Tim would say that for any one of our teammates. Okay, business owners, a guaranteed retirement solution. So much like Nasia, business owner Dylan, 45 years old, objective to have 41,000 net retirement income from age 65 to age 90. Keyword corporation. The corporation deposits $50,000 into a corporate owned dividend paying life insurance policy per year for 10 years. $500,000 into the policy. The corporate tax on the daily cash value growth inside the policy is 0. Passive income tax, 0. That's pretty good. From age 65 to age 90, Dylan accesses $41,005 per year after tax. So that is $1,066,130 out. Dylan passes away at age 91. Net death benefit, $806,717. Dylan's death gives rise to the capital dividend account in the corporation, the CDA. CDA credit is $3,506,284. The capital dividend accounts, the capital dividends are paid out of the corporation tax-free. So the death benefit flows in of 800,000, but there's a capital dividend credit much larger than the net death benefit that flowed in. So if there's other assets in the business, they can flow that out to the corporation tax-free. Understanding that your wealth must reside somewhere, did this policy take away any of Dylan's options? The answer is no. All it did was give him more options. No. Thinking about your kids, grandkids, or great-grandchildren? Absolutely. There's nothing stopping you from putting policies on their lives, and just like I'm doing, systematically transferring your wealth to those children in a tax-efficient manner while you maintain 100% of the control. My son and my daughter are the lives insured, but I own the contracts. I'm in total and absolute control. Now, we've been taught to be divisive in the family, right? You got to do it yourself. You're going to get your own car and your own mortgage and your own job and have your own problems. The wealthy simply don't think that way. They circle the wagons and keep the money in the family. They find ways to support each other and create more wealth. I don't know how this picture got in here. This isn't my family reunion. I think this is Jason's family reunion. This is his wild Uncle Buck. Apparently he's not invited to any more of the family reunions. Joking aside, I actually stole this photo from Jason. This is a picture of Jason's family. I can't specifically remember which year this was. I think it was 2019, when they went on their annual family trip to discuss what they're going to do with the family banking system. Each and every one of these individuals that you see here, they're all lives insured. They have policies in place, and they've been planning out how they can build their system and what they want to accomplish and how they're going to expand and how they're going to support each other to keep more of that money coming back. They've recaptured all of the third-party debt. It all resides within the policy system, and all those payments are flowing back to the family. This is the absolute gold standard for how to perform the process of family banking. God bless you, Jason. Over the course of an entire lifetime, think of all the money that leaves your family for things like mortgages, investments, cars, properties, weddings, taxes, tuition, business loans, insurance. That's all energy. That's all financial energy that's being transferred, and someone's putting it to work. It may as well be you. Personal expenses, business expenses, RVs, vacations, sports, hobbies. How many more of these things are you going to get to enjoy when more of that money is flowing back to your family and you're growing an ever increasing pool of financial value? I didn't mention this earlier, but just think about personal living expenses. I talked about financing my vehicle and financing investments. Is there anything stopping me from financing my own personal expenses using the system? I do it right now as we speak. There's nothing stopping you. Add up all the money that you've earned and spent to this point in your life. That's a lot of cash. It's a lot of money that you're earning. You know, we grossly underestimate the amount of capital that we're going to earn over a lifetime. Now, could you write me a check for that amount of money right now? I'm guessing that 99% of people walking around are going to say no. Have the banking process work for you rather than against you. Jason Lowe, great quote. Now, you don't have to get a system of policies from us. Keep that in mind. There's absolutely no pressure here. There are lots of great people out there that you can work with. Absolutely. I mean, of course, we hold ourselves out there as the absolute best that do this. No disrespect to anybody out there that's practicing the concept, but you certainly don't have to do business with us. But what I would say is please just do not try to do this alone. Okay. You got to make sure that you have a really good coach. That's one of the things that Nelson taught us. And again, that same concept of who, not how. Right now, you don't know how to become your own banker, and that's okay. You're not alone. Don't try to do this on your own. Find the right who to help you accomplish the how. And we've got a lot of amazing who's on our team. Households, business owners who do this right have all had a great coach. Just like I said, I recommend getting a good coach. Let's look at, many would argue, the greatest hockey player that was ever born. Even the greatest of all time always had a good coach. Michael Jordan, the list goes on, right? Any football player, MMA fighter, anybody you can think of, George St. Pierre has a team of coaches around him. And when you choose who you're going to work with, here are some things to think about. Okay, now just think about this for a moment. You've got to be careful about the life carrier that you put your policies with. So what I mean by life carrier is the actual insurance company that you work with, and to ensure that the policy is actually designed properly. You can't just go and look on the shelf and pick any whole life policy or any insurance policy that exists out there. It has to be with a specific company designed a very specific way. Again, don't do this alone. Number two, people who are selling you life insurance don't have expertise in this area. They might be very good life insurance planners. They might know their way inside and out of a product, but they don't have the experience of actually implementing the process of becoming your own banker and gotten the training that's required and the coaching and the years of practice so that they can lead you down the path. So make sure that you work with somebody who specializes in becoming your own banker. Make sure that you're working with an authorized infinite banking practitioner through the Nelson Nash Institute. Now, this person should be somebody who can actually show you their system of policies and what they've been able to accomplish. Number three, you should choose somebody who is an authorized infinite banking practitioner with the Nelson Nash Institute. My goodness, I predicted my own future here. This is amazing. The reason you should do this in your life is because you deserve it now. How long are you going to continue to penalize yourself and wait before you take action? People will sign up for things like car payments and mortgages without reading the fine print. They just trust and away they go and it's all good. And people pay their bills, they budget, and they make sure they're making their contributions and flowing money away. Rarely do you ever you can put Vern on your budget if you want to, but by Vern, I mean you. Rarely do you ever put yourself on your actual budget. The cliche, pay yourself first, profit first. Everybody just pays everybody else before they pay themselves. So think about the future. Start now, plant the seed. The time's going to go by anyway. Let it grow and let it build, and let it capitalize. The longer you wait, the more you penalize yourself. Simple as that. The real questions are, what's the cost of doing nothing? What's the cost of doing nothing? It just continues to work against you, that perpetual headwind that you're flying into. What's the cost of just one more year of all your money leaving the family or business permanently? One more year. What's the cost of giving up all the interest that you could have otherwise earned by spending your own cash when you could be accessing money from your policy system to achieve the same objectives? What's that costing you? So schedule your call with us. It's included with the webinar. So we're just going to do a quick recap here. Truth number one, the difference between you being stressed or staying relaxed financially is who controls the banking function in your life. Truth number two, you don't have to put your money in a prison for decades and rely on somebody else to achieve the financial abundance that you deserve today. You just simply don't have to do that. Truth number three, you don't have to be rich to become your own banker. You just have to educate yourself, get a good coach, and get started. Simple as that. The process looks awesome, but how will I know if this works for me? Very simple. Schedule your call. Schedule a discovery call. We'll be happy to help you determine if the process is actually going to be a fit for you. The reality of it is this can work for everyone, but it's not for everyone. Okay. So click the link that you've already been sent, or text the word schedule to 780-809-4599. That's 780-809-4599 and reserve a date and time that works for you. Now, I want to give you a bit of an offer. What is included in the webinar? Your discovery call. And also, if you book a call tonight, schedule that call, and you'll get a complimentary series of videos from the Nelson Nash Institute, known as the Foundation of IBC. It's a $49 value where you can get an introduction. This is directly from the Nelson Nash Institute. There's actual modules and videos that you can go through. $50 value, and you'll get that complimentary if you schedule your call tonight. Let's take a look at some of those images there. Now, a clarity meeting. You get your videos, you schedule a call. We'll schedule a 1-hour clarity meeting. The advisor or coach that you speak to is going to help you determine exactly what your next step is. And when you're ready, you'll schedule a 60-minute Zoom call so you can take a deeper dive into the process, make sure you have absolute clarity, and just learn more about what that teammate has been able to accomplish with their system, and start to discover what's possible for you and your family. All this sounds great, but I don't want to do it alone. Okay, so I'm going to share with you. This is a look at some of my great and powerful teammates. This is actually the front stage. This is our advisor teammates here. Dan Allen, Peter Laut, Henry Wong, Roman Pushker. God bless you, Roman. Joe Eldon, Jinjin, Jason Lowe, Sarblo Gill, Vern McCarty, and my great and powerful friend, Richard Canfield. I'm going to actually do a quick screen share here, gang. I'm going to show you some of the resources that you're going to get along with working with our team. So first thing is you're going to get a lifetime of mentoring, quarterly group coaching sessions. We have our first group coaching session coming up, I want to say February 5th, where we're going to have our whole entire team. We're going to spend a morning together. We're going to have probably 200 plus actual clients of ours who are practicing the concept of becoming their own banker in their own lives on that call. And we're all going to work together as a community to get better. A lot of great who's helping each other. So we have a lot of resources here, more valuable resources. Let's take a look. This is the Banker's Vault. This is our YouTube channel. You can see that we have over 2,000 subscribers. I think this time last year, we might've had 200. It's rapidly expanding, and we're going to easily achieve 10,000 subscribers this year. And in fact, if you want to learn more about the process of becoming your own banker and be kept abreast of all of the great content that my colleagues are posting, look at all these wonderful videos. We have all different lengths and shapes and sizes of videos. If I go here, we have a huge list of content for you that would add value, and playlists as well. You can go to the playlists, and maybe you're an entrepreneur, maybe you want to learn about inflation, maybe you're a farmer. I'll also share another great resource. Again, Richard Canfield and Jason Lowe, two powerful gentlemen with a ton of experience. They created their own podcast and a YouTube channel here called Wealth Without Bay Street. This is fascinating. Same thing, lots of episodes and all that, and you can pick titles that make sense for you, or just binge the content and watch them all. But if I go to playlists here, one thing that I want to point out is obviously Nelson's content is powerful, but I'll point out the client success stories. So we actually have client interviews that are occurring and where they're sharing their own experience. These are clients of Jason's and Richard's and the rest of the team where they're sharing experience. And I'm looking forward to, in a couple of weeks, I'll be recording an episode with one of my clients as well. One more thing that I'll show you here is, again, like I said, we don't just have our advisor teammates. It's everybody in the background. It's the backstage, our client success team. These are the great and powerful people that help us complete all of our life insurance applications. They help keep our advisor teammates on track. This is my strategic assistant here, Rhonda, and we have a whole team of people that help. These are the who's that help us stay in our unique abilities so that we can keep our energy up and stay strong and just get better and better so we can add more and more value to you and your family. So this is an awesome team. There's Tim Dawson and Frank Abate. We have trust and estate planners. We have an entire team that can help you create the objectives that you need, and we'll tap teammates on the shoulders. We work together, we collaborate, because collaboration eliminates competition. And this isn't about me. This isn't about us. It's about you. So we just do whatever we can to make sure that we add as much value as we can to you. So that's our teammates. And one last thing that I'll show you here. You don't have enough content. You don't have enough resources, you say. Well, head on over to the Ascendant Financial shop, where you can get some of our top bestsellers here. Of course, Nelson's book is my #1 coaching tool. We also have a little bit of swag. I got a bunch of these t-shirts because I think they're awesome and they're very comfortable. And I like to just walk around and let people know that cash value is king and that they can become their own banker. So we have a ton of books here that will just add a ton of value and just give you the ammunition that you need to get better at becoming your own banker. Remembering Nelson. This is something that you can all do. Head on over to nelsonnashfilm.com. If you understand the problem, banking, the solution will become clear and you'll know exactly what to do. The problem is banking. The solution is becoming your own banker. That's our Nelson Nash, the developer of Becoming Your Own Banker. So nelsonnashfilm.com. I believe it's around a 1-hour documentary where you can actually get to know the founder, Nelson Nash. You get to know who he was and what he stood for. What was Nelson all about? He was all about just making a difference for people. And these are just a quick look. I won't read any of these or go through them, but we have hundreds and hundreds of 5-star Google reviews from all across the country of people talking about their actual experience having dealt with our teammates in Ascendant Financial, our client services team, and the list goes on and on. These are just people that are raving about just how awesome we are. But it's not about us, it's about you. You can experience the same experience as they did and just start creating momentum. If all this process did was keep more money in your family or business, would it be worth it? If all this process did was create a peaceful, stress-free financial life, would it be worth it? Think about that. The power of commitment to yourself. That's what we're talking about here. Put yourself first. Take the action, change what you're up to. It'll transform your life. You do have options. First option, do nothing, and nothing will change, and you'll continue to work your butt off for banks, and everyone else will get all of your money. It's just true. Second option, schedule your discovery call, get a hold of the right person, and take control of your finances. Okay, you can do this. If you're committed, what would you do? And are you committed? Nelson said in his book, he said, you have to have desire to get started in this process. And he said, you have to have a burning desire to get out of financial prison. And everybody on our team and all of our clients have that burning desire. I want you to picture a day. Picture a day when financial control is in your hands, not the banks, not the government or a risky temperamental stock market, your hands. Picture a day when your spouse says, thank you. Thank you for not making me wait 30 years to enjoy the lifestyle that we want today. And I get a little choked up when I read this slide because I have experienced this. My wife and I have been together for 18 years and we've been through a thing or two, ups and downs and financial stress. And she actually just said that to me the other day. She said, thank you. Like, thank you. I don't feel that stress anymore. And she can just same thing. She's freed up those attention units so she can focus on taking care of our family and doing the things that she's good at. When your finances are, picture a day when your finances are exactly where you want them to be. And you know with certainty that you have the freedom to travel when you want to travel, relax when you want to relax, and serve when you want to serve. Work optional lifestyle. Picture that day in your mind. You need the use of money till the end of time. Simple as that. You're going to need the use of money for the end of time, and the time's going to go by anyway. Nothing happens to the flow of money without the function of banking. We've been over this. Investments, debt recapture, living expenses, whatever you want to do. The foundation is always the function of banking. You need to exchange money for goods, investments, and services that you'll need. It's simple as that. And it's all about banking. In life, payments are not going to end, but you can certainly change who is going to get your payments. Sarblo Gill was on the call. Think about that. The payments are actually not going to end, but we can control who's getting it and who that money is being put to work for.